What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So hope everyone has been doing well. This was a well-needed break for me. I've disconnected from the stock market and focused my time on completing a small side project I've been working on for a while now. My first animation using Blender and 3D files from several NFTs that I own. It's not perfect by any means, but considering I didn't know how to animate about 3 months ago, it was fun to challenge myself in a way that I had not before and get some use out of my NFTs. But anyways, today I am here to talk about Neo. A couple of weeks ago, they reported their Q3 earning results. Given that the stock is still under pressure, you can be tempted to believe that they did poorly. Not quite the case, and the forward guidance was actually pretty good. So my plan is to summarize the earning results, cover what contributed to further downside pressure, and close with why I continue to believe this weakness should be bought. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and a thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and smash that subscribe button. Those are 2 easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. So jumping right in, I took some notes on the high points of the earning call to make this go a little faster. Revenue increased by 32.6% for Q3 to $1.8 billion, which is significant. Net loss was $577.9 million, representing an increase of 392.1%, which isn't surprising given the various headwinds and increased R&D cost. Profit margin were also impacted again this quarter due to higher battery cost. They reported 16.4% compared to 18% last year this time. For comparison, Tesla profit margin are right around 30%, but then again, Tesla is in that #1 spot in the industry. Deliveries were a nice highlight. Neo delivered 10,059 vehicles in October, up 174% year over year, and it delivered 32,607 cars altogether in Q3, up 29% year over year. Great performance there. Neo cash position is super strong. They're sitting currently at $7.2 billion as of September 30th in their war chest. This puts them in a great position to continue their European expansion. But most importantly, they provided very strong guidance for deliveries in Q4. We're talking between 43,000 and 48,000 vehicles. This suggests record-breaking deliveries for year-end, and that is significant and noteworthy. So overall, this was a solid quarter. Now, for what is weighing down the stock, the zero COVID policy is certainly top of mind, though as of last week, those restrictions have been loosened up a bit given the negative impact it has had on businesses and the mounting scrutiny that it has generated. So what's really behind the additional downward pressure is 2 analyst price downgrade that came following the earning call. The first one from Barclays, analyst Jiang Shao cut his price target to $18 per share from $19, citing cost concerns and expressing worries over elevated expenses near term. The second one came from UBS analyst Paul Gong, who lowered his price target from $32 all the way down to $13. That one hurt. He justified the price adjustment based on execution challenges he sees ahead and believes the market expectations for the ET5 are already baked into the stock price currently. So now, even though that isn't great news, consider that the price as of Friday close was $10.46. So even accounting for these lower price targets, there is still decent upside. And let's not forget that out of the total 35 analysts covering the stock, 94% are still recommending it as a buy. Now, if we zoom out a bit, the company continues to make great progress on its European expansion. They delivered the first ET7 in Sweden, in addition to having rolled out the first battery swap station in the country. The ET7 scored 5 stars in the NCAP, so that's the New Car Assessment Program, safety assessment. And the only company that bested them is Tesla with the Model S and the Model Y. And you can add to that the fact that they have now cut down the wait time on the ET7 to 3 to 5 weeks from almost double that previously. When you take all this and put it together, and you also consider the strong guidance they gave during the earning call, there is a high probability that they see supply chain issues easing significantly as we wrap up Q4. There is certainly some headwinds to be mindful of near term, but the company fundamentals continue to improve. That's the main takeaway here. Now, to be clear, my personal take on this has not changed. I will continue to buy as we hover at the sub $11 price range. With Q3 now over, more disclosures are coming to light. Hedge funds are back on a buying spree despite the narrative in the media of China being uninvestable, right? Billionaire George Soros fund upped their position by over 100% and bought call options for the very first time. CalPERS, the largest US pension fund, increased its NEO positions by 18.2%, and Ray Dalio Bridgewater upped its NEO holding by 6.6%. Fun fact here, this is the fifth consecutive quarter since last year that they have added to their position as the price dropped. So there are more and more disclosures out there, but you get the point. The bottom line is this. Inflation is starting to roll over. October surprised everyone to the downside with a lower number than expected. You need at least 3 data points to establish a trend lower, so you want to pay attention to these dates here. December 13th and January 12th for the next 2 CPI readings, February 1st for the press conference following the FOMC meeting. Assuming inflation continues to decline in December and January, that may be good enough, not for the Fed to start cutting rates and make a pivot, but good enough to simply stop raising interest rates. That should provide markets with a solid catalyst to start moving higher and decisively leave the current trading range we've been in. And as far as what this means specifically for NEO, well, NEO is introducing 5 new models in the first half of 2023, with one set to compete directly with the Tesla Model Y and others targeted at the mass market. We should see a nice move up in the NEO stock price on the back of that catalyst. And so I'd say there's an easy double up on investment made into NEO today between now and mid next year. That said, do your own research before you buy. The last thing I'll say is this. Zero COVID policy in China, supply chain disruptions, and inflation won't last forever, right? So personally, I'm taking advantage of the low prices now so I don't feel FOMO later. But on that note, that is it for me today. Next week is Thanksgiving, so happy Thanksgiving to those of you who celebrate it. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.